what y'all think, but I think that's pretty.
You guys are so good at that.
What's going on, everybody? Welcome to our first This Week in Crypto of the second half of 2022. It's pretty amazing that time has flown the way it has, but here we are, and it's going to be a lot of different topics for us to discuss. We're going to go over kind of the overview of where crypto is currently standing and also try to figure out exactly what kinds of macroeconomics are factoring into crypto right now and how that might be impacting the rest of the year here now that we're in Q3 officially. There's, of course, Maxim with me. Welcome to the stream, Max. And we have a correlation analysis coming up in terms of the TA for Bitcoin, which we haven't done in quite a while, as well as the correlation between Bitcoin, gold, and the S&P 500 right now. But of course, as always, to kick things off, we want to remind everyone, this is not an investment advice channel. We are here to supply data and information in what's going on behind the curtains of cryptocurrencies and their blockchain networks to give you guys an understanding of what typically happens when we see the kind of divergences and fluctuations and metric changes that we're seeing in the markets right now. So without further ado, here is our data screener showing what's been going on over the past week. And it's pretty much red all around. It was not a good start to the week. We did have, just in the past 24 hours, a bit of a surge from Bitcoin and Ethereum where they rebounded. Bitcoin rebounded back above 20K. Ethereum briefly went close to 1100, and then they both retraced again just in the past 10 hours or so. But it's been very topsy-turvy, and the volatility has really picked up more so than I think we've seen since early June when the big drop happened. Of course, there was a big May drop and a big June drop, and both were followed by periods of more stagnancy and trading in a tight range. And now here we are seeing various attempts at a breakout followed by a big drop. So it's just bull trap after bear trap as people try to figure out what the next move is. But right now, as it stands, Bitcoin is back to 19.5K, Ethereum at about 1,064. And then you can see the altcoins especially have really gotten hammered. Many projects have dropped more than 20% of their market caps once again in the past week, which is certainly not a great sight. It looks like the biggest drop within the top 100 was Matic. We also saw Solana take a big hit, Elrond, Bitcoin SV, Zcash, Thorchain, among many others. A few bright spots. If you want to call it a bright spot, and you've been sticking with Terra Classic, which very few of you have, Luna Classic or Terra Classic, I should say.
Not me, definitely not me. This is one of the surprises, yeah.
Right. But it is starting to get a bit more traction now as people are discussing it after it doubled its market cap in the past week. Of course, that's not saying much because the market cap had then dropped 99.9% in the previous 3 months or so. So take that with a grain of salt. And even the associated stablecoin, Terra USD, is back up to 4.4 cents when, of course, it's designed to be at $1. So take that with a big grain of salt as well. Maxim, yeah, I'd love to kind of kick off before we go into some charts. Your take on the past week. We were talking right before the stream about some macroeconomics we might look at. But what have you been seeing?
I think it's important for us to differentiate from crypto only. I mean, we do it from time to time, but now it's a very good time to understand and reflect on a few things. One, when we look into the crypto, we always relate. There is a Bitcoin dominance, and there is cycles of when it's growing, pushes the market, and then there's the alt season and pushes the market high, and then we crash, and then again Bitcoin's dominance growing. So there is a specific way of cycling inside the crypto, and we believe to know more or less how to do it. For those who maybe joined it recently or didn't realize yet, it's a key thing you need to understand when to go to Bitcoin and when to go to altcoins. And it repeats on my memory 5 years already, like 3-5 times. But this alone is not enough anymore, because my macroeconomic shift 1 year ago, when central banks start to be worrying, need to do something. Now, all over the globe, they're implementing different level of monetary policies, tightening more or less. America is tightening, hints with some tightening. Europe is not yet, but they definitely will have to do it. Now, it does impact. And you can see that at this time of shift, basically all markets go in one direction. It doesn't matter, stocks or crypto or gold, commodities, they kind of now move together, and we need to understand the cycles behind. And the cycles is money, monetary base. If we take for the whole area, for the whole world, monetary base is deflating. But still, it's a lot of money, too much. It's not maybe as much as we expected it to be, but it's too much money. And they're flowing. And they're flowing in some kind of specific way. It's not about to say that we can fully understand and predict where money will flow, but we should follow how the money are flowing. And they've been flowing definitely out of stocks and crypto the last half year, surprisingly out of bonds as well, and a little bit into commodities like oil and gas. I mean, it's in general it's a lot, but lately not so much. Now something has changed. I noticed it. This is what I was talking about. It's quite an interesting shift that commodities are falling. Oil, gas, gold, they're falling in price. Some of them quite rapidly, like gas, surprisingly. You will be surprised, but it dropped like 40% if you take it from the top.
Yeah.
So commodities, money are flowing out of it. Where are they going? Yeah, where is it going? It's not that everything goes in cash yet, some part yet, but I see that the bonds are increasing. It means people start believing in what governments are doing. Yeah, like treasury bonds or German 10-year bonds. They see quite a massive inflow. So the market participants believe what governments are doing might be the right thing, or they might manage to contain inflation. So the prices of, if you, and I will look into the prices maybe next week because it will take a really long time. We might even spend the whole hour on this topic, but I'm just the summary. Money are flowing into low risk, but something showing confidence in what government are doing, surprisingly. I'm really surprised to see it, but you know, marketers like this, they always surprise you. So we might be facing that inflation will be maintained. But at the same time, as this maintained inflation shows that market don't believe in global economy much. Stocks are not really much recovering, kind of struggling. Commodity price keep falling or staying at, on a lower level. And if commodities are increasing, so market participants don't really see much demand in the future from the real economy. And this is a situation where we are. How crypto will be able to maintain in such environment, it's a very open question. On a global scale, from big money, I think crypto is on the last place. Well, it's high risk, high reward, but for them, it's less understandable what is the value created by us here in crypto. And if they believe in what government is doing, is maintaining inflation, so it's open question. What we gonna see? What we gonna see with crypto happening? Yeah. So this is what I want to say. And once the money moved into, as we see it now in bonds, it cannot move forever. Yeah. So there will be saturation, maybe very fast. So where will they move next? Yeah. And then we have open question: stocks, commodities, or crypto.
Yeah, it's interesting.
I bet it will not be commodities, so it will be either stocks or crypto. So and we can speculate on it.
Mm-hmm. We've historically seen that commodities, gold and silver, are typically the safe havens that people flock to in these kinds of market conditions, especially in conditions which are correlated with inflation and interest rate rises. That's where you typically see precious metals and physical types of assets start to get money poured into. But this is an interesting case where perhaps it's such an obvious move that nobody has really done it yet, because the big whales know that the smaller traders are anticipating those prices to go up. And sometimes we've seen Bitcoin and crypto latch onto the S&P 500. Sometimes we've seen it latch onto gold prices, as we can jump into in this chart here. But right now, because both are dropping, there's really nowhere for Bitcoin to correlate with other than to continue falling down in tandem with both. And it's, of course, been throughout 2022, at least these past 6 months, correlated much more heavily with the S&P 500. But we can see, there was a breakout just in the past, or about a week ago, that Bitcoin didn't really follow so much. And then it kind of fell back down with the S&P after it gave up about half of those gains. But I agree with you, Maxim. I think that a lot of the money has to go somewhere eventually. And because it's poured out of crypto, the S&P 500, commodities, even oil. Here in the US, it was announced today that households are likely to see a check for gas price refunds. It's gotten so bad. Here in Los Angeles, a gallon of gas at the cheapest level is over $7, which is historically high. So there's a lot of interesting factors that are at play that aren't really that correlated with crypto right now, or they are correlated, I should say, but they aren't. They're more so real world events than anything that has to do with crypto fundamentals, like the charts that we're going to be showing. But they still very much impact where prices are fluctuating and preventing breakouts and causing constant waves of panic every time there's a big drop that are very, very unique to crypto from the 14 or so year history that crypto has had.
Mm-hmm. Yeah. I'm also want to remind and keep in memory for myself that because of the size of the market, of crypto market, and because of a profile of participants, it's not a pension funds. It's much more risky participants. The moment market sense there is a change, it always most often crypto market will move much easier, whatever direction is. It can be up or down. So we should keep it in mind. The movements in crypto markets, they will be more swift than in stocks. In stocks, it's big money, but it's also heavy money. It took them quite some time to realize what's going on and to decrease valuations. S&P, Nasdaq, DAX, whatever you take. It didn't happen very fast, but eventually it lost quite a value, especially in Nasdaq. So it will take them time to go up again. But crypto is a very risky money, which is now also being punished too much risky participants. And this is what we don't see in the classic finance. If something is wrong with a bet, if it's big, it's too big to fail, it's like ridiculous what we've seen over the last 10 years. In crypto, there is no big to sell. There is no one too big to fail. If you're bet and your bet's okay, that's it, you're liquidated. 3 Arrow Capital. Don't look further. Or Terra Luna or participants. People lost billions. And no one, people cared, but no one rescued them. Except if it's Alameda trying to rescue them, but it has its price. Yeah. It's not it's not really rescuing. It's more like buying something on very deep discount. It's very fair. It's very shock environment, but it's very honest. You're wrong. Okay, you're liquidated. You're right. Okay, you own a lot. And this place will attract this kind of players more and more. They see how good at the moment Alameda is doing. Okay, I want to do the second one. There are enough players as smart as Alameda. And there will be inflow of this kind of players. So the moment market shifts will be very swift. If even people now think, oh, when can we go up, or it will take us years. No, the moment it happens very fast.
Yeah, it's not so much about when. It's about when do the signals show that it's on the precipice of happening.
Yes, exactly.
And I see so many people ask all the time, is it going to be, August? Is it going to be November when prices are going to pump? It doesn't really work like that. It's
maybe it will be even tomorrow. Maybe it will be even tomorrow. Who knows? Yeah. Or maybe it will be tomorrow in 1 year. But it just will be. It will be fast. It will be, I think, like a few months, and we can retrace all the losses. Yeah. And I'm not saying we will get not all the losses. There are some levels which will be difficult to overcome. Like in Bitcoin, I remember 25 keys now kind of first substantial resistance. We might spend some time to overcome it. And then 35. Still, the movements between these areas will be very swift. Yeah. Get prepared. We can play with shorts. It's fine. We can, or if you need money, it's also fine to sell, but keep something. We might see swift movements up it was swift down. Okay, I think maybe enough for from this general talks. We have probably on your side, Brian, nice data prepared.
Yeah, I definitely have plenty of stuff to go over. Right before we do, I just wanted to address Clio 13's question. The Bank of International Settlements this week came out saying banks should hold no more or less than 1% of their reserves in Bitcoin to accommodate the changing market, among other things. I don't personally believe this is a big deal. Bank reserves kind of work a lot like a crypto exchange in that the funds in it are fairly stagnant. And really the addresses that impact prices moving up and down are active traders, those 100 to 1,000 or 1,000 to 10,000 coin addresses, which banks undoubtedly had some of. But even if they are to dump a significant amount of their reserves, or whether that's already happened, it's hard to say. It's not a long-term threat because bank reserves are exactly as they're defined. They're reserves. They're not addresses that are pumping in circulation and active addresses that are allowing crypto to cycle. And for that reason, yes, if there are reserves that might be about to be hit due to the Bank of International Settlements decision, that could hurt crypto a little further, but this is kind of more speculative than anything right now. I don't even know if the statement they made is going to actually be able to change the status quo in any way. But my take is that it's not going to be a major event. Maxim, do you have any opinion on it?
I need to understand a bit more. Yeah, really.
Yeah.
It went. I didn't see it. The bank. Okay.
Yeah, it's basically just a decision to make banks hold less of Bitcoin overall in their reserves, less than 1% of their reserves. But I like I said, there's so much unknown about how much banks actually own in the first place. It could be very little. It could be way more than we anticipate. They don't have to really disclose it. But yeah, I think it's a good question. And Clio 13 just followed up and said, I've seen it somewhat as possible bullish news for the long term in terms of adoption. Appreciate your take and response. Yeah, it could be, it could be, but we would have to definitely research. I'm just giving you my best understanding of the event, and I don't think it will impact too much in either direction, but it's certainly an interesting story. All right. As promised, I wanted to kick things off with just some very simple TA based on the things that I have seen. I know, Maxim, you do a bit of TA as well, so feel free to chime in. But in terms of like a support and resistance range, we've kind of fallen into one over the past couple of weeks with a support level sitting at around 18.9K. This is where we've seen the prices typically bounce off of at least a couple of times. And the support resistance level, I should say, is 21.6. So we're sitting at around like what's the number I'm thinking of? $10,700 range right now, $1,700 range. And because of that, it is kind of a tight spot we're in, where if we see prices go below 18.9, then the next support level would be down here at just about 18,000, and then falling below that, we could very well see a pretty sizable drop off if the price does decide to go that way. But on the other end, notice how once we get past around 22.3K, there could certainly be a pretty big jump, because everything between 28 and 23 was pretty much zoomed right past when we had that drop off on June 12th and 13th. So that's how I'm seeing it in terms of kind of a support resistance level. If you guys are planning to make buys and sells on the limit side of things, those would be around the prices to keep in mind. And then going to, we already touched on the correlation, but I just want to say, until we see the S&P 500 either drop below 3670 or rise above 3910 or so, it's probably going to be choppy for Bitcoin as well, because it's followed the S&P for so long. But also watch gold, because gold has really been struggling right now. And until that changes, Bitcoin probably is going to correlate more with the S&P. But I do think that if gold, in most of these situations where inflation is a major impactful scenario that is causing prices to fall, once things pick up, we could see Bitcoin kind of follow from the gold bugs and silver bugs who are interested in alternate investment options besides the normal equity route. Okay, I wanted to highlight the buy versus sell mentions on crypto platforms right now, including Discord, Telegram, Twitter, and pro traders chats and Reddit. Right now, we're continuing to see less and less discussion related to buying and related to selling, and that creates a scenario where people are more or less stagnant and afraid. This is kind of a FUD type of pattern. You may say, well, you know, the FOMOers are dropping off and the FUDers are dropping off because people aren't really mentioning selling more. Well, overall, when there's just less mentioning overall, it's generally a sign of fear from the crowd, and the fear can actually be beneficial to an eventual rise. If we just type in an asterisk here, and it'll take just a few seconds to jump up, we can see the overall amount of mentions on crypto platforms, and it's pretty clear. I can't draw a line on this particular chart, but it's pretty clear that things have been dropping over time. We can zoom out just a little, and you can see that the big peak happened in late April and has just dropped off more and more since then. We're now kind of in a tweener level where we're still higher than we were prior to the all-time high levels that created a ton of euphoria and essentially started the collapse of Bitcoin's price. But we're much lower than that euphoria spike that we saw, pretty much back to the levels we were at in late February, showing that there's a lot of disinterest right now from traders who are tired of just seeing loss after loss, week after week. And that is favorable for the patient hodlers who have been sitting around and not stressing about the price so much, or at least being patient and not capitulating and being part of the weak hand drop-offs that we're seeing. And then we can see also, in terms of overall mentions, Telegram is the platform that really seemed to have dropped off with an early June exit. And that makes sense because Telegram tends to be the platform with the most anonymity, the least repercussions for people to try and scam people, as sad as that is. And when there are not a lot of new addresses and new money and new people coming into the space, Telegram and the anonymous nature of it tends to struggle a little more than the others to gain significant conversations and interest in crypto. Reddit's been a little more stable. Twitter's been a bit more stable, as we can see. So that's just a little bit on the social context side. In terms of actual social trends, I should say I wanted to get to the top 10 list really quick. Here we go. So it's a lot of words like sorry and stolen, spend, a lot to do with potential scams and crypto that might be moving out of addresses involuntarily. And that's never a good sign and correlates a lot with fear. FTX as well. Not really many words that are applicable to actual assets. And it's been this way for a while. I haven't seen more than one altcoin be on the top 10 in honestly what seems like months. I'm sure there have been some rare occasions, but at least anecdotally, when I have checked the top 10, there's almost never a huge trend and rise in multiple altcoins. We might see an occasional one, sometimes for not so good reasons, like Luna or Luna Classic. But Bitcoin, Ethereum, they haven't been up on this list in quite a while from what I've seen. Coinbase, of course, with the drop of jobs and some of the controversies they've been in lately. But yeah, that's just a little bit on social trends. And I wanted to remind everyone that this page can be very valuable in seeing what people are talking about prior to the eventual spike that will happen. Okay, so we've touched on the real world events, the topics in the news. Now we're going to go into the nitty-gritty and look at some of the actual fundamental metrics here, beginning with circulation, which continues to look good. This red trend line tells the story and shows that the amount of unique tokens moving on the network continues to rise. And over time, when we see a rise in circulation and a drop in price, it's usually a recipe for something good. Doesn't mean that it's going to be immediate. It's more of a long-term indicator. But we clearly see this as kind of if I could shade this in, it's a green wedge. I'll use a little rocket emoji instead, which signifies there's a definite bullish divergence forming right now. And we can see it here on our NVT model, where the price for the second straight month closed in, or I should say the divergence between price and market cap, or excuse me, circulation market cap is green for a second straight month, and it has been yellow-green at least going all the way back to October, indicating that the price has dropped off way more than circulation has. So that explains why we've seen such a bullish divergence forming. And it can go this way for quite a while, but eventually the green tends to predict correctly. Same on the Ethereum side. It has been a little more of a roller coaster where they actually showed a semi-bearish and even bearish divergence for a long stretch going back to last June. But last month in May, we suddenly saw that things were turning semi-bullish, and in June, full-on bullish. As prices have really dropped off a cliff, they corrected more than 80% at one point, where Bitcoin, it was around 70. So there was a bit more of a drop off in Ethereum, whereas circulation has been kind of flat for Ethereum, but it's been enough to create this bullish divergence there as well. Daily active addresses dropping off, which is a bummer. Ever since about mid-May, we've seen less and less unique addresses interacting on the network, which can be a concern for sure. We'd like, in an ideal world, to see both circulation and daily active addresses rising together, but unfortunately, we have only got our wish on one out of the two for now. Until that changes, there's going to be a bit more concern. You can see quite clearly that when this 30-day trend line is rising, that's when prices rise. When it starts to fall, that's when prices start to fall as well. We do see little mini jumps, like right here, where there wasn't much of an impact, but we really want to see more of a sustained effort than 1 to 2 weeks of this. And then we can start to feel pretty confident that something is brewing. Moving on to MVRV here. So as I usually do on these calls, we want to mark the negative 15% line as well as the plus 15% line here and here, respectively. And as of now, we saw that we were in a super opportunity zone for a lot of the second and third week of June. And then due to some time elapsing where things were flat, the MVRV began to neutralize again, but it's still in a position at negative 9%, where there is a lot less risk compared to usual if you are adding on to positions or opening a new position in Bitcoin, simply due to the fact that there is still plenty of trader pain being highlighted here. If we start to see a drop below negative 15%, that would be ideal because that is a historical time, as we can see, where prices tend to go up, sometimes more than usual. Sometimes it never even gets to that opportunity zone before it blasts off. But then we want to start focusing on things like whale behavior and other things that might be impacting that. Weighted sentiment. So here we can see that after a brief visit, barely into the positive range for sentiment, traders have now become negative once again, showing that there is some major fear in where prices can go next. We look at the past 7 weeks or even 8 weeks going back to early May, and we see the traders have been in negative territory 7 of the 8 weeks here, while prices have either been flat or fallen off a cliff. And that is an anomaly, folks, because normally it's going to look more like this, where traders are doubting the price and suddenly we have a blast off. And then when things get euphoric, that's when prices correct. So considering price sentiment has been very negative for the vast majority of the past two months, it is a better sign than usual that prices can eventually rise and punish the people who are doubting Bitcoin and expecting prices to go further down. I don't know if, okay, good. Funding rate, the funding rate model is up right now, and it does show that people are putting their money where their mouth are, and they are betting against the price of altcoins and the price of Bitcoin right now. Both funding rates on the Bitcoin side and average altcoin side are in the short range right now. And gradually, just over the past 2 days, we've seen the altcoin funding rate really trickle down, while Bitcoin was a bit more flat. You can see when they started longing right up here because they thought this was the little mini dip, they got punished and prices went further down. Sometimes, 1 hour of funding rate isn't enough to see a clear impact. But overall, when people start to get a little too excited, prices tend to drop. When they tend to get a little too fearful, which I don't really see any good example of right now, that's when you'll see price rises. But we do see, as it's refreshing to the current hour, that people are starting to doubt Bitcoin, at least at the highest level in about 12 hours. So interesting there to see that funding rate is showing some mild glimpses of doubt at the moment. Moving on, supply and exchanges, a long-term indicator, of course, for those of you who followed this one. And it is looking good that there isn't a significant amount of supply moving back onto exchanges. It's sitting at about 9.5% now. If we went to just about a month and a half ago, we were still above 10%. So this is good to see. And if we start edging down to the low 9%, that's just further indication that there is less risk of a massive sell-off happening, or possible to occur, I should say. All right, and for the main event here, I'll take a little extra time on this one. The whale behavior at the moment indicates that the key tier here, the one that we probably put the most credence in, 100 to 1,000 Bitcoin holders are actually showing some very small glimpses of a rise. It's not significant, to say the least, because they were sitting at about 20.7% of supply held back in early March and got as low as 20.15. So a little over 0.5% of the supply of Bitcoin was dumped by this key tier of whales. But since then, it's come back up. They've added almost 0.1%. So give or take like 15 to 20% has been accumulated back since the dump started in March. Of course, there were other big dumps that happened before then, but it's at least a good sign that this tier is rising a little. But that said, if we go to the next tier, 1,000 to 10,000 Bitcoin holders, they're free falling. They're really dropping a lot of Bitcoin right now. If we go back to the 1 year look, we can see that this tier is clearly at a 1 year low. Keep an eye on the red line. If we go back to 2020, We're definitely at a 2-year low as well, going back even further. So 2019 was the last time that we saw the 1,000 to 10,000 coin Bitcoin addresses being as low as they are right now, holding about 26.5% after being at a peak of 30%. So they've dumped over the past year and about 5 months or so, they've dumped about what looks to be 3.5% of the supply of Bitcoin. And you might think, oh, well, maybe it's going to the higher tier, which is kind of a hybrid of active traders as well as exchanges. We don't put quite as much credence in this one because it involves a heavy supply of exchanges, but they haven't really been accumulating too much as the red line and even the pink line have been dumping. So no, it's not a situation where a lot of these addresses are graduating to the higher tier. It's mainly them dumping to these smaller addresses, and that is not ideal. We don't want to see the smaller addresses holding more and more of the whale's bags. We'd rather it be the opposite, where weak hands, people who might own a few $100s, a few $1,000s of Bitcoin, are dumping to the people who own a few $1 million of Bitcoin, because those $1 million addresses are the ones who can pump up the prices so effectively, as we saw, especially the red line here right after Black Thursday started, beginning in early April. Look at how they accumulated a total of what looks to be about 3.4% of the supply. They added 12.7% to their own personal bags. And during that time, the price of Bitcoin went up 467%. So that's an example of something we really want to see. And then what we don't want to see is them starting to take profit massively in like the span of 3 months, or a little more gradually like they did from July up until June of this year. And yes, prices can still make all-time highs while they're starting to dump. That's where like the pink line can factor in. And that's why we like to look at merged addresses together, like 100 to 10,000 all at once. And then we get a really nice picture of, when they start dumping, all-time high hits right after and then dumps off a cliff. Same here, they start dumping in late October, all-time high hits 2 weeks later and then dumps off a cliff. And that's pretty much what we're seeing now. And it's, just from a zoomed out perspective, looking at 3 years here, obviously this group just went below, if you want to call it a resistance or support. They were holding 46.7% in October 2020. We just fell below that, down in the 46.6s now. So pretty much at its lowest level, this tier, since July of 2020, just about a 2-year low now. So very concerning, but a small glimpse of hope just over the past week, where they've accumulated a tiny 0.2% of the supply back by combining the 100 to 10,000 Bitcoin addresses. So I definitely find this very interesting. It's definitely one of the key metrics to keep an eye on, alongside MVRV and funding rates. I think are very good short to midterm indicators right now. So be patient and check on this at least a couple times a week when you have time. Exchange flow balance still looking pretty neutral. Not a lot of significant fluctuations in either direction. We had the huge outflow that occurred in mid-June, where we did see a bounce from that, which is typical, but obviously it's corrected ever since, and prices are starting to inch close to where it was right when that outflow spike happened. So in terms of inflow spikes, not much to worry about there, which is generally a good thing. Network realized profit loss, not too much to say here either. We did see a big spike downward, indicating there was a lot of people getting out of their positions at a loss, and this happened just 2 days ago. It's mostly neutralized again, with prices not really showing much impact from that. But if we continue to see major negative spikes in network realized profit loss, it's generally a much more good sign than bad, because it means many people are getting out of their positions and giving up while at a loss, and that generally causes rocket fuel for prices to eventually explode and make a nice jump for the patient holders out there. Development activity, not much to say, pretty neutral. Social dominance, so this is an important one. Beginning with volume really quick, it doesn't look like there's been anything significant. We did have a small spike about 2 weeks ago, but nothing big in the past week. And it's mostly a continued decline pattern going back to the all-time high levels in mid-November of 2021. But let's take social volume off and just look exclusively at social dominance right now. I'm going to zoom into the last year. So with a little more context, it does look like Bitcoin is being discussed at a high level once again. And this is historically a good thing to see. We like, and this is of course an arbitrary number, but we like to look at dominance staying above 20% to indicate that prices will, the Bitcoin price is being focused on more than, the meme coins and shill coins and assets that have seen a temporary pump and are suddenly distracting traders from the coin that is propping up everything in crypto, which is Bitcoin. So as long as we're seeing Bitcoin's dominance above 20%, we're optimistic that prices can go up. If we look at times, stretches that social dominance is staying above 20%, notice the rise as it went above 20% here. Notice the sustained rise when prices, when social dominance was above 20% all along here. And then notice the plummets. That's a great emoji to resemble the plummets. Everything, here, for example, as prices kind of tried to stay up top and then fell because altcoins were all being talked about here. We can also see a good example of it. Pretty much all of this stretch here, where we saw, plenty of volatility, attempts at a breakout, and then a huge fall. So we don't want to see all of this long stretch from October all the way, really until beginning of June. But this area, this is the most sustained level of social dominance staying above 20% since the pre-all-time high level, going back to early October. So, in my opinion, and Maxim, I'd love to have you chime in on the social end here for a moment if you want to. I think this is one of the better signs we're seeing right now in terms of sentiment starting to be redirected back toward Bitcoin and just social interest in general.
Usually two things good to combine. Dominance, as you say, social, and Bitcoin dominance, which can, for instance, on TradingView. Yes, it's interesting observation you can take out from it. Strong dominance of talk of Bitcoin, it means either a realization of the risk, which we see right now, or a realization that we are going, like we're in the middle stage of growth. So, and it depends on the context, or it depends on the market phase. So in a case where we look right now, this high values, it might be a sign on the bottom, people acknowledging Bitcoin is a king, the rest is a debt, the rest is a shit. You can only survive if you put in Bitcoin. So in the current market phase, the higher we go here, the better. Right. I would even like to see even higher. And you will see similar things on the dominance. When we're talking about bear markets, you want to see high Bitcoin dominance. It has to be like this because there is no other way to survive in crypto. You can only stay in Bitcoin. All the rest is crashing, and Bitcoin is outperforming in the real bear market everything. So eventually, both monetary and talkative attitude should align. Yeah.
I agree. I think just as Maxim put it, it's a matter of the crowd coming together and believing that Bitcoin is the only asset that you should be focusing on because altcoins are dead, right? That's when you start to see some improvements, and then altcoins, of course, do surge as a result of people not being as interested in them. That tends to be how it works, as counterintuitive as that may sound.
Yeah, and I'm talking about when we look into dominance bear market, because when we analyze what's going on in the bull market, it's a bit different story. So don't get confused. It's easy. Analyzing bear market, you want to see high dominance of Bitcoin, because unless we get there, the goal of bear market is not achieved.
Mm-hmm.
And it will be achieved. It's unstoppable. Yeah, it's inevitable, like Thanos. Majority should believe, talk, understand. Bitcoin is the only place to stay, all except stablecoins.
Right.
And or they should even like now start doubting that you can survive in stablecoins. Like so big amount of FUD we are seeing now. Even USDC. My goodness, it was a crazy effort just trying to FUD USDC. Okay. And I see emerging topics about DAI and Mecca, that the government is failing, and that it's this is what you want to see. Mm-hmm. People don't even believe in stablecoins anymore. And I'm not even mentioning Theta USDT. It's ongoing stories. It's non-stop prediction of the crash. And there is only way out in narrative, only in Bitcoin. Once you see it, okay, but then we are at the bottom.
Yeah. In summation, guys, it's really, you can look at social dominance for Bitcoin kind of like anything above 20% or even maybe 30% in some cases. That's considered kind of a fear level almost, because people are fearful of their Dogecoin and their Shiba and many of their coins that may not have as much development. They're fearful of those prices going down. And that's why they're all talking about Bitcoin and moving their money into the number one market cap asset instead. And then when social dominance is well below, that's a lot of people buying the dip of altcoins and deciding that, you know, Luna has dropped far enough, so it's time to jump back in and try to catch the falling knife. And usually that doesn't end well unless the majority of the crowd is already focused on Bitcoin, where we see the biggest price surges happening. All right, a few more things, and then we're going to jump into questions. Balresh, if you haven't done so yet, if you want to take a quick poll from the crowd, see if there's a few assets we can touch on.
NEXO. Everyone wants to know about NEXO. Actually, me included. I did not look into the data for the last few days. If anything changed, we will check also the stakeholders if there are any interesting patterns. But NEXO, will it be the next Celsius or not? Celsius. Yeah.
Yeah, good call. We can definitely check out NEXO in just a moment. So mean dollar invested age, really briefly, continues to go up. Dormant tokens are continuing to collect cobwebs and not be circulated around the network as we're hoping. When we do see that kind of circulation, I love just this rocket emoji today, and I'm going to continue using it until I can't find a reason to. Mean dollar invested age drops down. Rocket emojis happen and prices skyrocket. But for now, things have not dropped yet and dormant tokens are staying high. So watch this one closely. Even just a small tapering off period can be exactly what we want to see. And so far, it's just continuing to rise and rise. Ratio of on-chain transaction volume and profit to loss. This would be the 1.0 line right about there. I'm going to zoom way in to the last 3 months. Move this back to 1.0. There. So as long as we're below, as we've seen for the past going on 6 days now, that means there's a lot of trading at a loss. And that is a good sign for the short and midterm traders, because there's a ton of capitulation that can lead to a rise eventually. I like to look more on the 7-day line for this because I think it's more of a midterm indicator. And if we put that back at 1.0, so 3 out of the last 4 weeks are in negative. So people are trading at a loss. The past week that ended just a couple days ago on the 29th, that was actually a slight profit day as people were taking very, very slim profits on this rise on the 26th, and eventually prices dropped back down. So overall, pretty much neutral right now, if not slightly bullish, because we are, for the past couple days, showing that traders are jumping out and trading mostly in losses over profit. And whale transaction count, finally, mostly neutral. We saw a concerning lack of whale transactions around the beginning of the week, and they've rised back to kind of a normal area as of now. Okie dokie. I think we have covered Bitcoin pretty substantially here. Maxim, thanks so much for the contributions, and feel free to jump into this NEXO this conversation here, and we'll explore what's been going on. NEXO is, of course, the 90th largest market cap asset at this time, and it's been seeing its fair share of circulation spikes. It just had, it looks like today, one of the largest it's had in the last couple of weeks. These circulation spikes, though, mostly seem to correlate around price tops. So that's something to be a bit concerned about. Here, there was a spike at the top. This led to a top, and even this led to a top, and we saw a slide right after. Of course, this can be correlated with just Bitcoin slides overall, but NEXO is seeing another one, and I'd be a bit concerned about that based on history. Daily active addresses, more or less neutral right now. It sees its share of massive spikes, which could be internal tokens moving between founders' addresses. But as of now, it's stayed pretty dormant over the past week. MVRV, so going to negative 15% there, and positive 15% is way up here. So it looks like we're right around that opportunity zone right now, and it's actually been in a big opportunity zone for much of the past 3 to 5 days here, before jumping up just a little. But in a vacuum, this looks to be pretty good. I think NEXO has gotten pretty historically low, where it sometimes goes all the way down to negative 30% before it starts to rise. And this one did not really correlate with any sort of price rise, interestingly. It was kind of just stagnant, and then enough time elapsed where the MVRV had to go back up because 30 days had happened prior to the drop. If we go back a little bit, though, just to get some historical context. So this is the opportunity line right there. Yeah, I mean, mostly that negative 15% or below range does correlate with some bounces. It hasn't really been in these above 0% since early March. So we're looking at just about 3 months since there was actually some positive trading returns on average for these 30-day traders. So in a vacuum, we're looking at a pretty sustained period of losses forming, and that has to be bullish. And I would imagine, you know, based on these previous stretches, none of the stretches of sustained negative MVRV have really lasted this long, and things are going to have to give eventually, even if it's just a period of flat prices for a while. I'd be surprised if prices go too much lower until the MVRV here starts to get close to 0 or above it. Weighted sentiment, we are seeing another spike down into negative territory. It hasn't had too much of an impact on prices as of late. When you see a huge, significant amount of negativity, that tends to function as rocket fuel and really pump up prices. But we haven't seen anything quite this crazy below like a standard deviation of 1 since February of 2021. And I guess mid-May of 2021 also saw that, which is when we saw the huge plummet, and then everyone got negative, and we had at least a temporary rise here. So it is in negative range. There's some FUD going on with NEXO for sure, but it is not an extreme amount like we saw historically. Supply and exchanges has really wobbled quite a bit. It was going back to September of 2021, it was up around 16%, really jumped off, and about half of the supply was taken off just almost overnight here. And since that time, it has mostly moved back down up until late April, where a lot of supply came back on. But still, you look at where it's at now, it's 7%. It's still way, way down compared to where it was in June, July, all the way up to September of last year. So that has to be considered more of a good sign than bad. Now, whales, and this is where I'd love if you want to chime in a little too, Maxim. We look at prices being at about 57 cents right now. So we'd probably want to look at anywhere between 100,000 to a million and a million to 10 million. And I'll even throw in 10,000 to 100,000 just to see what these three tiers have been up to. It looks like the big story would be the pink line here. We're probably a little too zoomed out though, so I'm going to go just the last 6 months instead. Yeah, so even still, the pink line for the past 3 weeks or so has really risen. Now, NEXO does appear to be a very centralized asset in that the vast majority of assets are being held in the 10 million plus addresses. Well, they hold about almost 91% of the supply. And they, as you'd expect, don't have a ton of correlation with prices. It does look like, I will say this, it does look like the blue line really started to jump up again right as this latest drop in early to mid-June happened. So there is something to be said about that. But I would say that these three tiers are the ones to focus on the most. And the only line that is showing any sort of semblance of exciting behavior would be the 100K to 1 million coin addresses, which have risen a little bit. It does look like there's some alpha with it. I think it's best if we combine all together. So I'm going to go 10K all the way up to 10 million here, confirm that. And really not much to say. It looks like when you combine these three tiers together, it's been more or less a lot of choppiness. I don't see any significant signs of whales making a move in either direction. You know, it is nice to see that after going all the way down to 3.3%, they're back up to 5.3%. So that's a nice 2% accumulation of NEXO. But Maxim, do you have any tiers that you think might be applicable for NEXO?
I usually like to see those who hold in USD equivalent 10 to 100,000. They seem to be in USD equivalent, so it should be. And let's take a price at the top. So assuming that the people invested at the price when it was around $2, so we're looking. Actually, we need 10 to 50,000 coins. 10,000 to 50,000. We don't have it. Let's take.
Well, here we can split the difference, and we'll look at 10 to 100,000, and also.
Wait, and remove from this group the last one. 100,000. Yeah, 10 to 1,000, and then 10,000 to 100,000.
Got it. So 10 to 10,000 here.
Yeah.
And then 10,000 to 100,000 by itself.
Mm-hmm.
So yeah, this doesn't look too promising from what I'm seeing.
Yeah. So how it looks, as was expected, this group holds in around somewhere like 20 in USD equivalent, $20,000, 30, 40, 50. They're very active one. They're in a position, they want to preserve their wealth or maybe grow it. And when they see danger, they don't like something, they will exit it very fast. They're active. Small holders sometimes forget if it's, me including, if I have somewhere just $100, maybe I will not maybe, I will not care. But if I have in anything 20 to 50,000, I do care. I do care a lot. So this red line, this is what we see. They've been waiting, hoping for something. And at the moment, I think it was a crash. Well, there was something going on with NEXO. Many of them exited, yeah. And they started to, because price decreased, they still had some hope, started increasing again into the bottom and dumped it at the last few weeks, which is nothing unusual because that was everyone was dumping at the time. It was the last push to the bottom. So their behavior, this red line, is of importance. Is of importance now. There is no clear signal yet at the moment. They don't do much. Ideally, we would see them accumulating. Or it's also okay if they capitulate. If we see a sudden strong drop, is also okay. Could be sign of capitulation. But I would pay attention to this line. It seems to be quite good. Mm-hmm. By the way, how many percent are we talking about? 1.8, yeah, or 1.3?
Yeah, 1.4% for the red line and 4%.
It's okay. Take into account that it's only, I think 10% is given to free circulation. It's right. Okay. They represent 10% of all free NEXO token holders.
Yeah.
Unfortunately, I don't have a very strong opinion. There was a good sign, indeed, divergence on MVRV 30 days. It's quite a pattern I see a few times. No need to show it. It was just growing a little bit, which is a kind of okay. And if one more missing piece of information of this mid-range holders fit into the mosaic, yeah, we could come out with either buy or sell signals. Now I would not do anything. But we might be nearing. It is also possible for the market after so much FUD and liquidations that just when everyone expects NEXO to be liquidated next, it doesn't happen. It might happen just in the future, but not when everyone expects it. Or if everyone expects Alameda will save it, well, it will not happen. It will die. So need to see also in the social channels what are expectations at the moment, what people are expecting to happen with NEXO.
Right. And right now they're expecting a drop apparently because just the last couple of days here on the weekly scale, it does appear to be quite negative.
But not extremely yet.
Right.
Yeah.
Right. Yeah. We saw some 2021 spikes that were about twice that size. So if it starts to approach like -1 or more in terms of standard deviation from the norm, that would be a pretty good sign.
I mean, it's a bad, it will be very bad mood, but it's a good sign. Yeah. Right. My market likes to move between extremes most of the time. People asking in our channel about H consumed. Indeed, what is an H consumed? Do we see long-term holders really moving their coins?
It's a good question. Check out H consumed really quick. So it looks like the big dormant coin movement was happening just about 2 weeks ago here in mid-June after the drop happened. You did see a very small spike, but that isn't really anything outside the norm. So the answer, Land Paul, would be yes and no. It looks like a lot of the movement happened here, but not much since. Mean dollar invested age, while we're at it, might show something. It's interesting, yeah, right around the same time. So these age consumed spikes correlate with the mean dollar invested age drop. So there was some legitimate older coins being moved, but nothing really now. It's continuing to rise pretty indefinitely right now. Lines up with the Celsius drama. Yeah, absolutely. If we briefly just look at Celsius and compare the token H consumed and mean dollar invested age there. Okay, why don't we do a more comprehensive analysis on that one then? Circulation, not much to say. No significant spikes. Daily active addresses, no significant spikes there either. MVRV, So obviously after the huge rise, so it's funny, 2 weeks ago we had a This Week in Crypto, and a lot of people were talking about all the FUD that was happening around Celsius. But we pointed out how whales, and we'll jump down to that in a moment, they were accumulating quite a bit and not being too worried about the FUD that was going on with it. And sure enough, from the bottom, just from the 18th to the 20th, it jumped 192% or so in price. MVRV went through the roof, and people went, average traders very briefly were up 167% on the 30-day scale before the inevitable drop. And we've gone all the way back after this correction to more or less the same price we were at when the FUD started, just a little above it right now. And that has managed to bring the 30-day MVRV right back to neutral. It's still just a tiny bit positive thanks to this huge spike and some people taking a little profit correctly, but overall, we're right back to about where we started for Celsius, which is fascinating to see. Let's see, age consumed. So unlike NEXO, there really isn't any significant spike, maybe this very tiny one on the 12th, but this more or less just correlated with the drop that was happening, and it did correlate around right at the local bottom before rising. So that is interesting to see. But you want to look for more sizable ones like this one that can really indicate a price direction change and dormant coins moving rapidly. Supply and exchanges are staying low, which is good to see. Only 1.5% on exchanges, which makes sense with Celsius being kind of on their own in a platform where most of their tokens are held. I'll come back to whales in just a moment. I wanted to look at mean dollar age really quick. Yeah, nothing really significant here. It looks like ever since mid-February, it's been nothing but dormant tokens getting more and more dormant. All right, so back to whales. The price will more or less use the same tiers as we just used for NEXO because the price is close to the same amount right now. And it is showing a better story here. The 10 to 10K holders have risen pretty significantly. If we go from here to here, they've gone up about 30% or so in terms of their bags, the amount that were in their bags. And then the red line from the 15th until now, they've added about 13.5% to their bags. So both the key whales are staying pretty high despite this big drop. I would argue that this is a bit of a bullish divergence, Maxim. Do you agree with that assessment?
So let me see again.
Just really in the past 2-3 weeks or so, these pink and red line rises.
Yeah, looks like pink led the rise. They've been leading it. Yeah. And red surprisingly joined a bit later, and they decreased their position. Yeah.
I'd find it notable, especially here where the local top hit, they didn't dump back off, right? They stayed high, even though it corrected back down. The red line eventually did come a little back down, but they're still way above where they were back in mid-June. So on the short-term time scale, at least, this is looking promising.
Yeah, you can say so, yeah.
Exchange flow balance, nothing really much to say. Network realized profit loss, same thing. Development activity, if you're hoping that Celsius has a dedicated team that is innovating and improving the product, it's not looking like there's much GitHub activity at all happening right now. So that would be a slight concern if you're worried about an asset being a rug pull, which I don't believe Celsius is, but I'm certainly no expert on Celsius. Then the low development activity is a bit of a red flag. Social dominance, obviously, with it being in the news so much, it had that huge spike in mid-June and has more or less come back down, but it is being talked about a lot more than it usually is still, going back to the last 6 months or so. So Celsius is still on people's minds. If you start to see it rise back up here to like 5% plus or even like 4% or above, look for a price direction change. It's likely because, you know, if prices continue to sink and suddenly everyone's like, told you so, Celsius is a scam or it's a worthless coin, that's when you might see a big price rise to counteract all of the FUD that is happening. But same on the other end too. If you see a big spike in social dominance starts to rise and everyone gets FOMO toward it, then you can expect a big drop off, usually right away. $1 invested age, we touched on that. Ratio of profit to loss is right about there. So it's mostly showing negativity, more losses happening than profit, which makes sense when prices have gone down about 81, 82% in the past 3 months. So that's significant for sure. And then whale transaction count, pretty low right now, nothing special. Even during the big rise, we weren't seeing a ton of whale transactions here. So yeah, I think NEXO and Celsius were a couple of good assets to look at for sure. We did a pretty comprehensive analysis on Bitcoin and just the macro look at where the money from big players is flowing into in terms of this big bear market all around for equities, commodities, and crypto. So any follow-up questions you guys may have, definitely let us know in Discord. Appreciate it to those of you who jumped in and stayed the whole time for this stream. Your support is always appreciated. And if you haven't subscribed yet, please do so. It'll really help out with the algorithm and getting our content out to more and more people. And don't forget, you can also make referral code money by going to your avatar, going to your account settings, and you'll find a ref link in there that you can share with any charts you want to spread across the internet. And when someone clicks on that and eventually becomes a Sandbase Pro member, you get a nice 25 to 35% cut of their sign up. So keep that in mind as well. Hope you all have a great weekend. Happy July to all of you. And here's to a much better second half of 2022 than the first half. Cheers, everyone.
Yeah, talk to you next week. Thanks, Brian.
Later, Maxim. Thank you.